and welcome to Charting the Markets on the 22nd of August. This week has been quite a fairly quiet one, particularly from an economic calendar point of view. Markets will be looking specifically towards the Jackson Hole Economic Symposium at the end of the week. And tomorrow we get PMI data, the flash PMI data for August. Other than that, we really don't have much to talk about from a high impact point of view. But nevertheless, there are still some intricacies within charts that we can take a look at. Before we look at the charts, we'll just take a look at some of the data that's come across our way. In the meantime, we've seen in China a minor rate cut with markets expecting a little bit more on that front, that being somewhat disappointing. But general risk sentiment has appeared to improve just as we head into that Jackson Hole event. So now if we move across to the first chart that we have on screen, that is the Australian dollar, US dollar currency pair. And we've been seeing a significant sell-off that has ensued pretty much since the middle of July, moving well beneath that 200 SMA. And at the moment, as we'd expect, your pro-cyclical currency pairs, much in line with your US indices, where we're seeing a bit of a recovery, yet to call it any sort of bullish momentum at this time, but still very much well within that downtrend, that bearish downtrend, but at the moment seeing some sort of relief here. Quite a nice rejection at 0.6365, seeing the market then put in subsequent days of moves higher. And then again, today we're seeing a little bit more of a move to the upside. As I mentioned earlier, just as a risk sentiment overall appears to be easing somewhat. So Australian dollar, we're looking at a potential tag of 0.660. If this retracement is to continue, that would be our next level of resistance to keep in mind. And from there on, we can gauge whether or not this is likely to extend further to the next level, 0.6580. That does appear quite a challenge for now. And as mentioned earlier, the trend very much still to the downside. So you'd imagine people might be anticipating this bullish move from the perspective of bearish continuation at better levels there. Now, if we just take a look at the dollar and how the dollar has performed, we've been seeing the extended bullish trend on the back of rising US yields, particularly your 10-year US yield, that has been rising. And therefore, we've been seeing the dollar as well tending to rise quite significantly. But the last couple of days, we've been seeing a bit of bullish fatigue around this prior swing high, the early July, 6th of July swing high, and those higher extended wicks coming into play. They're giving the signal that perhaps we could be running out of bullish momentum, at least over the short to medium term. And those sort of doji candles, those very slim candle bodies, also providing further indication that the bulls may be looking to perhaps take some money off the table there. Again, not surprising to see the dollar moving slightly lower ahead of the more important economic risks ahead, or economic calendar events that we're looking ahead to on Thursday and Friday. So we are seeing the dollar moving a little bit lower, and interestingly, imminent test of this 200 SMA coming into play there. So we'll be looking at that with great interest. And also this 103 March 2020 high level, that is something that has also come into play in previous trading sessions. So looking at that pullback, if we are to see a further dollar weakness, hoping to see that remain above this 103 level, which would keep moves to the upside constructive heading forward. So quite a lot to look out for there on the dollar. Now, if we take a look at euro yen, if we focus on the yen, first of all, there's been a little bit more clarity coming through by the way of the Japanese finance minister, stating that it's more about the yen volatility that's undesirable as opposed to the absolute level of the yen, and that's with reference to dollar yen. But if we take a look at euro yen, we've been seeing this uptrend extending. There's been quite a notable level here, 157.90, that's come into play both as resistance and as support more recently. Today, we're slightly lower, but still trading within that longer term ascending channel, well above the 200 SMA. And of course, that rejection of channel support yesterday, suggesting that could still be seen further upside in this bullish trend. Now, drivers for the euro are few and far between. Of course, tomorrow we get PMI data where Europe, and in particular Germany, their manufacturing industry, leading the rest of the continent lower. So if we get a further negative print there, that could potentially stall this move to the upside. But the added benefit there is the fact that it appears as if Japanese intervention is not as imminent as initially thought. So we could still be seeing a drift higher in the coming trading sessions. Now, if we take a look at your indices in Asia, we're still seeing quite a bit of weakness. Now, if we take a look at the Seng chart, Asia not really responding to the degree that stimulus or support packages tend to provide. We had the slight interest rate cut to the LPR rate, the 1-year LPR rate earlier this week, and the market's looking at that as being rather insufficient as far as support is concerned. And that really has been the pattern over the last few weeks, and that markets are crying out for a bit more support from the Chinese authorities, and that hasn't been coming through. So looking at the Hang Seng, that sell-off certainly quite aggressive, moving down and to the right. We've recently broken beneath that prior swing low at the end of May, that level at 18,044, so a little bit above that 18,000 psychological level. We've then moved lower today, edging a little bit higher, and again, perhaps seeing a little bit of a reprieve from this aggressive selling, the RSI indicating that we are attempting to make our way back from oversold conditions. So we could be seeing a little bit more of a reprieve, and that to be largely influenced by your tech stocks. We've seen in particular a lot of hype around NVIDIA. They report their earnings tomorrow after market close. In anticipation of that, your semiconductor stocks surrounding the NVIDIA optimism have also tended to benefit from this. So we're seeing a little bit of an improvement across the board in terms of risk sentiment, and that's with a particular focus on your indices. Now, if we take a look at the FTSE in particular, that has been struggling more so than other indices. That sell-off being quite extreme, rejecting the 200 SMA, and that's sending markets quite considerably lower. We are seeing signs of bearish momentum fading at the moment. That longer lower wick on that was last week Friday coming into play at that fib level 61.8, a retracement of the major move. Prices moving quite considerably off that level. Yesterday we saw quite a bit of volatility, ultimately ending near flat, and then today a little bit more of an improvement, as I mentioned, that sort of general risk sentiment improving across the board in light of the very light economic calendar. So if we are to see a further pullback there, well, we're currently testing 73.05, and if we are to see further move 74.20, but as we've mentioned before, the trend still very much to the downside, or at least I should say your short to medium term direction very much biased towards the downside. We're also trading well below the 200 SMA, and that's usually a good trend filter. So perhaps looking at bearish continuation plays, fading these relief rallies, so to speak. Now the S&P 500, that's put in quite a bit more of a bounce relatively speaking. Again, risk sentiment easing somewhat, and price action adhering to that 43.25 level, which was a previous level of support that came into play at the end of June. So that now highlights this potential channel or range between 43.25 and 44.50, that being the upside to a potential pullback here. Now, that's recent bearish selling, of course, after breaking trend line support, that indicating that we are essentially looking at further moves to the downside, and 44.50 perhaps a good spot to consider further entries to the downside there. Now, looking at your commodities markets, they tend to have picked up a little bit more on the stimulus from China, moving a bit more favorably. If we take a look at the gold price chart, we're also seeing a little bit of a recovery there, and that's not surprising when you consider that the dollar is easing off a little bit this week, as well as our US yields as of today. So gold, again, seeing a bit of relief there. Now looking up towards that 200 SMA, which isn't very far away. That becomes the most immediate level of resistance, followed by 1915. So price action attempting to make some sort of a bullish move higher there. Looking at 1875, or actually 1893, if we are to see that bearish momentum continue. But at the moment, markets are just trying to take advantage of that lower dollar and seeing gold prices attempt some sort of a recovery to the upside. Looking at silver, that pullback a little bit more advanced, but particularly if we take that 200 SMA into account, now trading above that 200 SMA today. That quite positive for silver, and moving up towards the 50% retracement of the major 2021-2022 move. So that looking at resistance around 23.83, and a further moves to the upside 24.65. Although, as I mentioned, this well, commodities in general, particularly gold, silver, benefiting from that weaker dollar, slightly weaker dollar, as we look ahead to more high importance economic data and events coming up. Now, the last commodity we'll be taking a look at is Brent crude. We've been noticing that prices have eased, although now we're seeing a continuation of prices moving slightly lower, but you get the feeling that oil markets are likely to remain supported for the medium term at the very least, given the extended OPEC cuts. We have Saudi Arabia, obviously, with their voluntary cuts, adding to tightness in the market. Also seeing a reduction in Russian crude production. So looking at the oil market, although we're seeing a lower dollar, that's not necessarily going to do too much, you don't think. But again, if we are to see further declines, we are looking at these previous swing lows around $83 a barrel. But we also have that 200 SMA lurking at around $80 a barrel. So certainly quite a bit of support to the downside. And once again, given the fact that the oil market is incredibly tight at the moment, we're expecting, again, some more bullish momentum to take hold at some stage once again. But as it stands, looking at that shorter term move to the downside, looking at the prior swing low, as well as $82 a barrel there. And that rounds up today's charting the markets. While we have quite a light economic calendar, we only have a few Fed members giving speeches later today. Nevertheless, it gives us a moment to reflect on the charts and particular setups heading into the latter stages of the week, where event risk certainly picks up